This episode of Investors and Operators, I sit down with Grant Marcks, who is Principal and Head of Business Development at Atlantic Street Capital. Grant, over to you. I would love to hear, number one, you look a little bit more energetic than I would have anticipated for a new father. So let's start there with the life update.
Thank you, Jordan. Happy to be here and happy to have a brief moment of respite away from a 7-week-old for about an hour or so. That's been occupying some of my time during COVID, and the rest has been working on Atlantic Street stuff.
So I'd love to start off with Atlantic Street. What's the high level on Atlantic Street? What's the history?
Yeah, so we've been around for about 15 years, focused on lower middle market investing in founder, entrepreneur, family-owned businesses that can benefit from operational support and resources. And the way that we provide those resources is really as a service provider through a network of 20 plus operating advisors that can provide functional support, provide strategic guidance, provide oversight. These are folks who have run, big companies and can provide kind of the experience of having run middle market, large cap businesses and show lower middle market businesses how to get there, and all of the people, processes, and systems investment that's required along the way. So we just raised a new fund, our fourth fund last year. We closed it in September at our hard cap of $500 million, and we are in the process of deploying it. We've actually put about 20-25% of it to work to date, including a deal or a new platform this year through COVID, and hopefully some more to announce soon.
How would you characterize the past 6 months of this interesting time in our industry and economy?
Unique, hectic, both professionally and personally, as you know. My wife.
Please elaborate on the personal side.
My wife and I basically spent all of her third trimester living through COVID, and we welcomed a baby boy about 7 weeks ago. So it's been interesting. It's been fun. And then on the professional side, we've navigated it as well as you can, kind of restructuring and right-sizing, costs at some of our portfolio companies. And really this is in some ways what we were built and set up to do is help business owners navigate difficult times. And so and having the network of operational resources to help do that, we I think we've done well relative to maybe some of our comps out there. So we're happy about that, and through it, on my front, we've been able to get deals done, I think source relatively effectively, as effective as you can be when you're doing a lot of this Zoom type work and spending a lot of time on the phone and in lieu of being in person. But no, it's been good. And obviously with the personal stuff right now, it's you can see it a little bit in my eyes.
What has it been like doing deals in COVID?
A lot of time on Zoom like this. The particular deal that we had closed is one that we had tracked and known and visited and had some exposure to prior to lockdown and kind of mid-March. So we had that benefit, which was good. It was a category that we had spent a lot of time underwriting and trying to find platforms in. So in that regard, not a lot of kind of diligence work required on market or industry. And so, really it was just a matter of kind of taking the 95% of the work that we had done up front and taking that last ball and getting it across the finish line. So all good there, and a couple of things that we're working on in the meantime that are probably more relevant to the question. It's there are workarounds, and I think everyone's getting used to working remotely and trying to figure it all out.
Yeah, it was interesting. I was just on a global private equity challenges and opportunities fireside chat. And one of the things that Bob had mentioned and others kind of echoed is that deals are getting done, but they're either with assets that have been tracked pre-COVID, or if they are done without any on-site or minimal on-site, those are for add-ons. And so it's been interesting to see that trend. When you go through a crisis, you kind of really see who people are. I'm interested to see, especially with you and your wife having your first kid, can you talk to the culture of Atlantic Street and, the, I don't know, for lack of a better phrase, the true colors that you have seen with people experiencing going through this crisis?
Certainly, it tested the mettle of our operating partners, our operating advisors, in the first, 6-8 weeks, March, April, parts of May. And as investors, as business development professionals, you start to get a little bit siloed over time, and functionally you're doing one of a few things every day, and all of a sudden this sort of event happens and everything is all hands on deck for everyone, right? So I might be helping, on any given day with navigating our investor discussions, or working through issues with some of our lenders, or at any given moment hopefully bringing in some new deals that are creatively sourced or off market. As a firm, I think the positive of this is that we have really quickly adapted to working remotely, and it's helped even in some ways with communication, with consistency. It's definitely given a lot of people an appreciation for what folks at the senior level at our firm do, what folks on the operating side do, and in many ways our associates are working as hard, or if not harder, than they've ever worked. So it's been interesting. I personally have tried to spend more of my time. I have someone who works underneath me, trying to kind of mentor him and spend time with him, because times during this, I had capacity, and it was hard actually in some ways to see so many folks from our firm being so stretched, and to be in a position where I could spend time. I wanted to make sure I made good use of it. I was like trying to consult with and be a good kind of mentor to Joe Solano, who works for me.
How did you get to where you're at? What's the career path that you've taken?
Yes, I came out of school in 2009, set of circumstances where I was looking for jobs in finance, thinking that was, my next career path. Like that's what you have to do. You have to spend 4 years at a good school, and then you have to go into banking, and then banking to private equity. And the reality was that wasn't going to happen for me. So I wound up taking a job actually at the district attorney in Manhattan, and I was doing white collar crime investigation work as a paralegal for a year. I was an economics major in college, and I definitely had no clue that I was going to go work for the DA, going through 4 years at school. But I had a really good friend who actually wound up working for them. He wound up becoming an investigator with the DA, and then we wound up working for the bureau. So he went a different route, but he kind of counseled me, and he was like, listen, if you're looking for a job that's kind of finance adjacent, where you might be able to really go hide for like a year or two, kind of, you should think about it. And maybe you choose to go to law school. That was something that probably half of my paralegal class wound up doing. They were so gung-ho on going back to law school. I was like, this is not
you.
me at all. But going through that process of kind of investigating white collar criminals, I remember there was like one particular case where I was so obsessed with this woman's check kiting scheme. She had like this very complex check kiting operation that she had set up, and she was almost getting away with it until we got a tip, and I poured through her financial records. I poured through the 7 different operating companies that she had set up to do it. And I really loved getting into the weeds of trying to figure out if this woman was, basically a 20-year career criminal, but also, just interested in watching the flow of funds and how she was moving money from one place to another to try to hide the fact that she had basically wiped out her credit cards here, and here, and then set up new credit cards here, and here. So
how many cases were you on?
So personally, very few. I was there for about a year, and my purview was so focused. The check kiting thing was one very isolated case. Most of what I spent my time on was issues surrounding wire fraud that was coming from dollars that were processed on behalf of Iranian and Korean companies, so sanctioned countries that were processing US dollars through New York banks, which is a big no-no. So we were, and the way that you find out about that stuff is someone who has interests either in making sure that Iran is not doing that, or Korea is not doing that, or some other, not so great country, Venezuela, is not doing those things. They usually file some sort of anonymous reports, and those reports wind up filtering to the appropriate entities, and that's how the Manhattan DA wound up actually getting a bunch of their financial crimes cases through the late 2000s. If you go back and look at big settlements that the DA had with Credit Suisse, with Barclays, kind of big foreign banks that process US dollars through New York-based headquarters, they wound up settling for huge dollars, because basically what had happened is their compliance department was kind of looking the other way.
But you got to get a glimpse at criminals. Why do people commit white-collar crimes?
I was more interested in, the guy who had set up 4 shell corporations that probably knew that his fate was going to be met at some point. There was only a point to which, someone can list their company on the pink sheets and not actually have any real, business operations. And they're falsifying, records every year, right? That there's an end in sight. So I was more interested in the equivalent of the Madoff motivation, right? And it's greed, it's arrogance, it's obviously a little bit of kind of something broken in some cases. I remember sitting across from this one person and trying to understand it. She was crying, and I could tell that she was not sincere in her crying. She was crying because she was coming in for a settlement, and she knew that she had to go to jail. She wasn't sad that she had built people for hundreds of thousands of dollars. She was just sad that she was caught.
Well, you can make the argument also within investing. People are motivated to some extent by greed, or maybe we're just not hearing the stories about it. But I think that I think particularly in the lower middle market, you're working so closely with the management, and you have to know the operations, especially now, if you just want to be competitive in a process.
Yeah.
It's no longer we're across the river and we're on the 50th floor and we talk in quarterly board meetings, and there's a much different relationship. Sorry, just having a little epiphany here about the nature of greed and wanting something to that level.
If it is even a disproportionate, number of people, I think through, yes, we exclusively prosecuted folks, right? And that's probably 0.01% of the population, right? But I would venture to guess that 0.01% of lower middle market private equity deals involve some degree of fraud or mismanagement or, misrepresentations at least, right? So like, it's not like it's exclusive to the Manhattan District Attorney's Office, and I'm not going to say what I know of certain things or even stuff that's happened at Atlantic Street, but like it happens across our industry, right?
I've been in this industry for over 10 years now, and I think I've lost track of the amount of times where you have a spin out
Yeah.
and then there's always fighting, whether it's formal or informal and I've always wondered like why former employer who controls billions
Yeah.
is so worried about pursuing somebody and who's raising their first fund who worked hard for them for 5 or 10 years,
Yeah.
as opposed to a different narrative, which is, you know what, I'm going to do everything I can to help you. And I really appreciate what you did. And this kind of, and having a blue ocean mentality. Is there really that limited amount of deals that they would be competing for?
I talk about this with Jeremy all the time. So Jeremy Holland with Riverside, who was one of my mentors, one of the people that I still talk to probably on a weekly basis. It's not a zero-sum game, right? That's the thing that I struggle to understand sometimes is, yes, I want to find the best deals and have it be in the best scenarios and the best possible, valuation while still being a good steward for the sellers and our investors and all that stuff. But I don't have to do that in the absence of like trying to help other people, right? So taking the, firm spinning out and people starting new platforms aside, I remember when I left Riverside, right, like on a much smaller scale, I was joining an already established firm,
and you're at Riverside for 5
I
years.
was at Riverside for 5 years, right? I wasn't there for 25, 30, but a small step at a time. But I still talk to Jeremy. I still talk to Bob, right? Like we have a good working relationship and we try to help each other. And, I feel like I want to be that sort of mentor and shepherd someone in their next phase of career. I hope to work with the people that I work with today in perpetuity, but like the reality is people move around. In this role in particular in business development, it's like very fleeting. Like people move from place to place all the time. It's kind of interesting in some ways, but
Well, your point about Jeremy is really interesting because I think he or Scott Gilbertson wrote an article and it was basically talking about how they saw each other and,
someone said like, why are you talking?
Why are you guys talking to each other? And that's really interesting because it's almost relieving and it lifts big shoulders when you truly have a change of heart and a change of mind to helping people out. There are obviously points of competition that are proprietary, et cetera, but a lot of things, when you kind of have that giving mentality, what is the number one thing that people benefit from? Reputation.
Yeah.
And then that reputation follows you. I think what Riverside has that quote, which is like, leave good references in your wake.
Yeah.
And I've seen that. I thought it was just kind of BS corporate slogan that Jeremy was telling me in our first interview. But then after interacting with him, interacting with Bob and the others at Riverside, and seeing either texting or LinkedIn or just like how they're trying to be helpful, like that's what it really means. And it's about having a long-term focus. How do you think that Jeremy and Bob and maybe some others at Riverside have influenced who you are both personally and professionally?
My number one mentality, the thing that I think about every day, it's not always easy, is exactly that leave great references thing. But, more than that, it's how do I convince people, right, that I am sincere when I say, hey, I want to try to help you. What can I do for you? And then actually follow through with it and, see it to fruition, right? So let's say someone at what's now a different firm calls me and says, hey, I'm looking for a crane services deal or what have you. And, again, going back to the zero sum game, I can see a deal. It's not a platform for me. It's not an add-on for us. We don't have something in that space. 99% chance that person, Scotty's already seen it, but I would rather err on the side of, hey, make sure you saw this one. I just was talking to a banker. It's, seems like one that could be a fit for your platform, what have you. And then taking that out to, 15 other interactions over the course of the day. That's the thing that I'm trying to do and build here. And it obviously it comes from a place, right, of where I was trained and learned.
What have you gotten specifically from Bob? A guy who has pioneered business development in this industry.
He is just such a good man. I'm like in awe of him all the time. He's really kind. He's really generous with his time. He is really down to earth, and he just cares more than anything. Like, that's the thing that I take from Bob. Like, he called me or texted me like within 30 minutes of my baby being born. Now, he didn't know, obviously, like before my parents or anything. He just happened to like send a text and say, hey, thinking about you, like wonder what's happening. I'm like, Bob, I think you might be the first person to text me, like, right after my baby was born. So yeah, just those like little things. He cares and he shows it. And he was at my wedding. He's just a good dude. I think really highly of him.
And I've interacted with him multiple times, and I think one of the fascinating things that he just doesn't miss details, like the personal details that you think you're just breeze over.
Yeah.
Like really, he actually, like, he's paying attention to everything. He soaks it all in, and he'll reference it like on the next call or meeting or whatever. But like, it's really interesting. I've learned from him. Exactly your point about the need to have just a deeper sense of care for the profession, for others who you interact with, because those details do matter and they compound.
And he really wants to get to know people personally. That's the thing that I take from him. He really wants to like understand what drives people, what motivates people, and who they are. I mean, he'll and he works hard at it.
What was the transition like for you to a fund of the size and with a team of this size and the dynamic? And how do you think that you've kind of evolved?
Overwhelming is the answer to the first question. But, stepped in from, being one of, I think, 8 people in North America, probably more, to you're the guy, day one, figure it out. No CRM, no massive Rolodex that I could just go into and kind of start plugging away at. Not a whole lot of kind of process orientation, a lot of stuff that needed to get figured out and not a lot of time. And it was, we're raising new fund. We got to get, 1 or 2 new deals across the finish line in this current fund and go figure it out. And it was a lot day one. I was like, I call some of my former colleagues still consistently now, but I think I was on the phone with those guys all the time. I don't know what I'm doing now. Like, I need to, I need some help. But really quickly kind of got into the swing of things on the business development side. And I would say, professionally, what it gave me is really an opportunity to understand, on a more holistic basis, how a private equity firm really operates. And this is not disparaging of Riverside, but they are such a machine and such a big organization. You do kind of get a little bit siloed into certain functional roles, certain sub-functions within functional roles, right? So within business development, I was doing, probably a handful of things for a year or two, and then, elevated to doing a couple of more things. But over time, what I had always aspired to do and to be was, someone who is outsourcing and a relationship manager and someone who's getting to really bring value to the organization by bringing in deals and maintaining kind of the relationships for the firm, right? So when I got that opportunity at Atlantic Street, I jumped at it, and then I was like, oh God, what did I just jump into?
Do you think that you were underestimating your experience and knowledge, or it was accurate? You were in over your head and you just had to find some way to swim.
I want to be generous to myself, maybe, and generous to my former employer. I think I was ready. I just think I was nervous. It's only natural. I was 27. I was like figuring a lot of stuff out real time.
Were you the first hire in a dedicated
No,
BD function?
Someone had been doing it, which obviously helped, and there's a lot of continuity. We didn't overlap, but a lot of stuff that had been in place that I was able to keep moving. But at the time, and Fund 2 was a $75 million fund. We were we were kind of pre-marketing Fund 3, but needed to get another deal done. So yeah, it was an inflection point for sure. And there was a lot riding on getting a new platform closed, we were in the process of selling a big business, a big win for us, but a lot contingent on that getting done. And it was a leap of faith for sure for me to go from, $10 billion fund with, fundraising is never a concern. They will churn out, new deals every, with consistency. Someone's going to be there to execute on them. Someone's going to be there to manage them. I was an employee 6, employee 7 at, a firm that had been around for a little bit, but was really kind of just hitting that scale point where we were raising, a much bigger fund. It was a $200 million fund cover. And, there was a lot of risk in it, and risk, I am pretty risk intolerant. So it was a leap for sure, but everything that was promised, to me when I joined Atlantic Street has been executed on. And fast forward 5 years isn't like no time. That's supposed to be one fund cycle. We're in 2 fund cycles from there. So we moved really quickly.
Why do you say that you're risk intolerant?
The biggest purchase that I've ever made, the biggest investment, this home that I'm sitting in that you see, I was so conservative with my assumptions about how much I would put down. And I don't know why. I just have this mentality of at any given moment, something could happen. Something is at risk. And I'm working on it. It's possible anyway, but the more established I become, the more confident I feel. But it's I think it's a little bit of confidence, and it's a little bit of just maybe how I was brought up. I gotta always be a little bit on edge, a little bit concerned with what might be happening next. I think I always was brought up to feel like something could happen, something bad could happen that would disrupt things, that would change things really dramatically for me, for the family, whatever it might be. I think it honestly comes from multiple generations on one side of my family, and that's definitely carried through. And now I'm thinking about my son. I'm I want to try to break that cycle.
Yeah, I think about that a lot. Even with parenting, our 3.5-year-old daughter, when we are playing outside, for example, I err on the side of, she'll figure it out. If she bumps or she busts, she got 5 stitches in her chin because she was jumping from this thing. And I'm okay, maybe I need to reel it in a little bit. But I'm on the opposite side of the risk spectrum. Rewinding, when I started Debt Maven in 2016, my wife and I were on the back porch, and I was mentioning, hey, it's perfectly fine. I'm more than happy to go get a job. You're pregnant. We need some stability. And then she said to me, you'll be kicking yourself when you're 75 if you don't take this particular risk. Yeah. And one of the things that taught me was that my perception of risk was far greater than the reality of it. Yeah. And then I didn't do enough thinking of the downside scenarios and the okay, what happens if that happens?
Yep.
So if I have no money in the bank account, then what's going to happen? I'm probably going to go live, including the new board,
The family.
could go live with, we could go live with family. And is that really that bad? Well, I guess it goes back into like, what are we optimizing for? But it's interesting because like your measured approach to risk is very opposite of how of just my background.
Yeah.
But that reinforces the need to have different perspectives on a team. Is there anything that we haven't talked about?
In the last year of Robert Morgenthau, he was, I think he was the DA in Manhattan for like 60 years, and it was his last year. And he was, I'm taking, because we talked a lot about Riverside, and we talked a lot about Atlantic Street. I'm gonna give the DA a little bit of shine. They don't get enough. Robert Morgenthau, 98 years old, I think, when he stopped being district attorney in Manhattan, and he showed up every day at 8 a.m. and he was in the office every day. It was not just like hey, he's the DA, in title. Really, there's all these other people. He was like really the guy.
And it also speaks to find whatever it is that you can truly be passionate about.
He wanted to be there every day. He could have said it at 90, like, I'm good. And he kept running for a reason. Like, he wanted to be there. So,
well, that is a good message to sign off on. And the key takeaway is be passionate about what you do and do something that you can do until you're 98 years old. Great to see you. Talk to you later. Bye.